Hello and welcome to Market Views, a podcast series of Open Business Council and SGT Markets, where we discuss financial and trading news, interviews with key personalities, and engage with our audience. Today we have Morten Nielsen and Jack Nikogosian, who are co-founders of ARYZE, and my co-host, Peter Kristensen from SGT Markets. So welcome, Morten and Jack, to Trade Makers. Making dumb money smart, digital cash by ARYZE are full reserve stablecoins issued as e-Euro, e-GBP, and e-USD. All variants of digital cash are backed one-to-one by government-issued assets. So, welcome, gentlemen.
Thank you.
Thanks. Thanks for having us, Hilton.
No, so basically, this dives straight into the first question. So, with the prevalence of stablecoin business in the current market, how does ARYZE differentiate itself in terms of utility, programmability, and overall benefits?
Well, maybe I can kick it off with my initial thoughts on this, and I'm sure that Morten will add his thoughts to it. When I started looking at stablecoins, it's almost a decade ago, and one might think that a lot has happened in the realm of stablecoins, and there are many established players, but some of the issues that are inherent with stablecoins are still very apparent today. For example, lack of interoperability, and lack of multi-currency support. Most of the stablecoins are either issued on, let's say, one primary blockchain, or can be moved between blockchains via a form of centralized institution. None of them offer convertibility between currencies. So you cannot easily convert a dollar stablecoin to a euro stablecoin, but even by the same issuer. Traders and the ecosystem at large is dependent on centralization, on lots of liquidity being available for slippage to be bare minimum, and people can oftentimes not use the ledgers they prefer. With ARYZE Digital Cash, we have put emphasis on multi-currency issuance, as seen with our 3 stablecoins today, and our ability to be blockchain agnostic. We don't care what wallet you prefer. Like an ATM shouldn't care if you hold a Gucci wallet or Dolce & Gabbana wallet. That's up to the user. So we need to have digital cash available natively on most of the popular ledgers out there. And those 2 verticals, I think, is a key differentiator.
And Morten, you've got anything to add to that in terms of the utility of ARYZE?
Maybe I answer the question a little bit indirectly and ask what's not working in the current financial system that we have today, and then look at what are the benefits we get out of stablecoins like what we're introducing here. We have a meeting with the finance minister of a large African country, and we're going to talk a lot about financial exclusion and how we can make money transfer and especially remittances cheaper than they are today. This is about financial inclusion. It's about banking the unbanked. It's about making transfers of money cheaper than this today. It costs nearly $2,000 billion a year to move money around our financial system, and that's a lot of money. When it comes to remittances, it costs up to 10% for workers working abroad to remit money back to their poor families in these countries. And they normally don't have normal bank rails even for making these transfers. So it's very costly.
On your website, you promote financial inclusion. So how does ARYZE aim to address this, especially in the context where traditional banking is not involved? And furthermore, how is ARYZE addressing the issues of financial inclusion in other countries like the US?
I think that it is important to recognize that neither stablecoins nor cryptocurrencies will fix financial inclusion alone. The reason why we can now target and appeal to financially excluded people is because they have a cell phone in their pockets. So this digital revolution and this mobile revolution is an enabler. And that makes it so that these internet native tokens, which basically cryptocurrencies are, right? They are native to the internet, that these types of instruments can be held and spent by anyone with a phone. So the fact that there are more kind of people with mobile phones than there are people with bank accounts, that creates a unique opportunity for the entire ecosystem at large, for cryptocurrency participants, but also for the likes of stablecoins, CBDCs, digital deposits, whatever they are called in the real world in TradFi. With ARYZE, we are utilizing this new opportunity, the fact that people have mobile phones, to create a solution which combines these various wallets, these various exchanges. While you might have PayPal and Venmo and Cash App in the US, you have mobile pay in Denmark, M-Pesa around nations in Africa, in India, UPI, I think it's called. Everyone has their own silo. Everyone offers their own wallet. But the issue is that these wallets, they do not speak with one another. There is no interoperability, and that's because none of them trust each other. Stablecoins and CBDCs and these types of assets are infrastructural components that can remove the need for trust in established middlemen or newcomers, wallet providers, exchanges, banks. All types of financial institutions can now trust each other because they do not need to trust the blockchain, and they should not need to trust the solvency of the asset used to send and receive. With ARYZE, our stablecoins are essentially consumer-facing CBDCs. They are as secure, seen from a credit risk perspective and bank risk perspective. They're as secure as if they were issued by a national bank. So if you so trust the euro, you would trust the e-euro as it's backed by euro bonds. That means that institution A and institution B can both utilize this e-euro without having to trust ARYZE or any of the involved participants. That's the programmable money part. Our mantra is making dumb money smart, because essentially I think the world is tired of new kinds of smart money, this coin and that coin and Jack coin, and everybody thinks that their coin will be the next big thing. So Morten and I, we said, well, instead of making a new kind of smart money, why don't we just make dumb money smart? And then let's see what people will do with it. So that's kind of the attitude that we have had. I don't anticipate everyone on this planet to start using MetaMask and e-euro as an on-chain solution. I imagine digital cash becoming an infrastructural participant in the world economies so that regulated participants can offer apps and products for people. Mm-hmm. I also think that attitude is different from the likes of some of the other stablecoins and cryptocurrency projects who still have this idea that my mom is going to remember her private key. Yeah.
In terms of given the evolving landscape of cryptocurrency regulations, now how does ARYZE navigate these changes, especially concerning anti-money laundering policies and the challenges in the traditional banking sphere?
To separate, it's all about governance and separation of risk and management here that we're dealing with. The way we structured it is that we have a foreign subsidiary that we own 100% that deals with everything called minting, deminting, issuance of digital cash, our stable coins, and in the future other assets as well. With that company, even though it's our own company, we have an asset management agreement in place so that we can completely separate the issuance of anything called stable coins from our treasury management operation that we have in ARYZE APS. When we manage that, we make sure that there is no credit risk involved in that. So we buy primarily short-term government bonds. It could also be government guaranteed assets, but generally speaking, just short-term government bonds. When we buy them through a capital markets house, with whom we have all the access to pretty much everything we need. And the assets are segregated from the capital markets house. They are then moved into to be placed with a custodian who does nothing else but manage 2,000 billion euros worth of assets. That's just like Euroclear would do on behalf of institutional clients. And as such, they're not part of our balance sheet. They're not part of our capital market house's balance sheet, but purely used to back up whatever we have issued. So we have a one-to-one minimum representation, backing of the representation of digital values. We also have an over-collateralization in place, so that whatever mark-to-market risk there might be applicable to the assets is minimal, but then we're also accounting for that. But then there's another little nuance here that is important, where we are kind of first movers on this approach to do this. If we say we are fully backed, we think we're very trustworthy, we have to be, but we need third-party verification on that. So we have a solvency checking agreement in place with Grant Thornton, and they can go into our ledgers, have access to all our ledgers, so they can see what has been issued, what we are backing up with, to check that the over-collateralization is in place, etc., etc. And they can do that at any time. So we cannot manipulate the assets and the holdings ourselves, because we know they're going to do it next week. We don't know when they do it. So difficult for us to manipulate any data, and they just deliver to the market and to us a report on the findings.
The only kind of addition I would contribute to this would be that many stablecoin issuers want to have a lot of different regulations and registrations with all kinds of different financial authorities. ARYZE went with a different attitude and a different model. Digital cash can only be acquired by regulated participants, so brokers, exchanges, banks, regulated institutions which are permitted to offer these types of instruments to end users, whether being business or individual. That means that every link knows what they need to know. So obviously we know who the broker is, right? And have a partnership agreement with the broker who can offer euro. The broker, being registered under the Danish FSA, they must adhere to the rules here in Denmark and Europe, and need to familiarize themselves with their clients, meaning proper KYC and AML procedures. Let's say that this client is a market maker, and the person makes the markets on Uniswap and on Kraken and adds liquidity on all kinds of centralized and decentralized exchanges. Those individuals trading on those platforms are not known to ARYZE in the same way as me holding Danish krona in my wallet doesn't make me a client of the national bank. So each step of the way, the participants know who they need to know, and they need to adhere to the rules that are placed on them. But this jurisdictional agility enables us to have an e-euro from Denmark or Europe, an e-shilling on the other side of the world, an e-Armenian dram in Armenia, as long as we can on and off ramp locally. So while in Armenia, you might see a partnership with a bank, in Europe, you might see a partnership with a broker, but shared from them the common denominator is that all of our partners must be regulated entities in respectable jurisdictions, which adheres to the global standards and laws. That means that for us to issue an e-rupee, we could do it in an afternoon as long as we have a local player in India. Whereas some of the competitors in the stablecoin markets might spend several years on introducing a new currency. Our agility will be our ability to issue currencies in all kinds of denominations is what will give us the global presence that many other stablecoin issuers that are dollar-backed are trying to obtain.
And it also means that we can do composite currencies if we want to, like a Commonwealth coin or an East African coin that represents the currencies of several countries, even combined with backing of gold and all sorts of things that might be a more efficient instrument for payments and capital markets in general in those local jurisdictions. Mm-hmm. And that's not possible today.
I mean, Jack and Morten, you've illustrated some very practical scenarios where ARYZE stablecoins can be used, particularly with the integration of digital contract management, also the regulatory landscape of the participants, which I think is very, very key. Peter, do you have anything to add on this?
Yeah, I definitely do. There's a reason why we actually work closely with ARYZE from SGT Markets. We're supplying the FX liquidity as well for covering and risk management of the internal risk management system of ARYZE in different currencies. But at the same time, we also have our trading or our platform, investment platform called Trade Makers, where we also will be using ARYZE token, ARYZE coins, digital cash, simply because it's 102% backed, which means it's much, much better than anyone out there. And that also means that we can trust that there is a covering and it's backed by government bonds. So we can go out and say, by the way, our clients or our investors, they will invest via ARYZE token. We also work closely together with a large exchange called Mercado Bitcoin, where we have tokenized the Latin American Brazilian bond. We will also be using the ARYZE token for this, or the ARYZE digital cash. And again, simply because it's 102% backed. So it's all about trust. It's all about security. And we also have another investment crypto fund called BCIF. And I just agreed with them this morning that we will also be able to utilize ARYZE digital cash for investment into their fund, which is an EU regulated fund. So again, it's all about trust. And again, this is why we're working really closely together with ARYZE.
Mm-hmm. This is very, very interesting. I mean, the other day we were talking, Peter, you and I, about the challenges that certain countries in like in Australia or Asia, who are actually buying assets on the NASDAQ, for example. And NASDAQ is going from a T+3 to a T+ practically 0.
Yeah.
But the traditional financial system or banking to send money from, say, Australia or Indonesia to the New York, to the NASDAQ to settle a contract, okay, is on a it takes T+2, T+3, which means they have to hold significant amount of money with their broker in New York, okay. And I just suddenly realized that they could use ARYZE because
they could. That's exactly. They can use the ARYZE digital cash, and it can go easily from euro to dollar to sterling, whatever it might be, or Australian dollar. Main thing here is if you have, like with Open Business Council, and you have 11, 12, or whatever, 100,000 companies within inside the financial system of ARYZE, that means you can actually now. You can transact between the companies. You can hold ARYZE euro. You can hold ARYZE dollars. You can hold ARYZE sterling and so forth to pay in between each other because it's 100% backed, 102% backed, which now means the transactions and liquidity goes very, very fast. And the cost for doing this is very low. So as a CFO, which I am in SGT, makes my life and my back office a lot easier and a lot faster to be able to control. And yes, we're not there yet, but it's coming that way. And I would say it's going that way.
Can I just add one example of what Peter just talked about? We have one of our many use cases that are going to go live sooner rather than later. It's a Danish shipping brokerage company. They dealing multi-million-dollar contracts. Iron ore, for example, from Eastern Europe to England. The problem that they have is that if they don't make a 3:00 deadline on a Friday when they want to settle massive contracts, the money won't arrive to validate the contract before Thursday the week after.
Yeah.
And even if it does happen before 3:00, they have to be lucky to get the money in on Tuesday in the Bank of the Eastern European mining company or whoever it is who provides you the assets that are being delivered to production in the UK. And that's a pain in the ass. The CEO told me that for 35 years, he had a heart attack every Friday because he had to wait and was uncertain about whether he met this 3:00 deadline for for validation of the contract. All that we can do instantly in the future. We don't have to wait for the traditional bank rails.
I mean, what's very interesting on here, because you're dealing with all regulated entities within that chain of value transfer, the on-ramp and off-ramp makes it so much easier into the traditional system.
And in connection with that, it makes it so that a rupee will be compliant by laws in India, whereas an e-euro will be compliant here in Europe. So we cannot think that, for example, with some of the competing stablecoins, the issues with these is not only that they're only dollar-backed, is that a counterparty cannot easily redeem them at all times if you're in a bit of an exotic jurisdiction, because you still have to get basically in bed with the US because it's basically like a Fed coin. I don't know if that's politically correct, but hey, I said it. So the point here is that our ability to work with local brokers in local currencies is a huge accelerant for the scalability of stablecoins. Our stablecoins will help solve many of the things that all stablecoins are trying to solve. But our way of doing it is way more inclusive and respectful towards the establishment, which already is. Whereas many of the other ones think that, well, we'll just do it top down, highly regulated, or we'll do it like super unregulated and shady. And yeah, people still use us. I think there's a reason why this has taken ARYZE 6 years to develop, because good things takes time. And this is not a sprint. This is a
marathon, not a sprint.
It's a marathon, not another sprint. Exactly. And we're building it the way it should have been built in the first place.
Mm-hmm. That's so encouraging, Jack. Thank you for that. So looking forward, where do you envision ARYZE in the next 5 years, especially in relation to the broader industry and the shifts in terms of market accountability?
I believe that most wallets will be able to speak together. I think you'll be able to send money from the PayPal coin just created a stable coin, or PayPal just created a stable coin. And this is now tied into Venmo and PayPal. So you have interoperability between two competing apps, which I think is really cool and a great step in the right direction. I think that this type of interoperability will be the norm. I think that all wallets will be interoperable, or else nobody will use them. And I think that ARYZE solutions will be a key component of enabling that. Certainly, some of these other stablecoins will also do that. But the thing with cryptocurrencies are that they speak the same language. I like to say that the tide rises all ships. Now imagine if we created a liquidity pool with ARYZE dollars and PayPal dollars, and then we integrated the ARYZE euro into a European wallet. That would then mean that you can go from that wallet, make a swap to PayPal dollars, and then put that into Venmo, or into the PayPal ecosystem. That's the thing about blockchain or token interoperability. I think that digital cash will be a key part of those types of ecosystems, and I definitely believe that many established participants, such as banks or central banks or large financial institutions who want to create their own stablecoin, they should do so using our technology. Now, why is that? Well, because a CBDC, a central bank digital currency from one nation, would not be fungible with a CBDC from another nation. It would just be another silo. But if the Australian dollar was based on digital cash, a Netflix coin was based on digital cash, a Bank of America dollar was based on digital cash, then these variants would be directly convertible to one another, and you would essentially have instant settlements from nation to nation, nation state to nation state. I think that within 5 years, a substantial amount of these types of efforts will be done using digital cash, and ARYZE will be a ecosystem participant, similarly to how we are familiar with the SWIFTs of the world and these type of banking rails that are currently in use. But these will, some of them will not be here anymore, and some of the ones will grow bigger. But ARYZE and digital cash will be a component of those types of ecosystems.
Now, you mentioned before that it takes very, very short time to actually create a new coin or a new digital cash, like the Mexican pesos or whatever it might be. Can you just use 30 seconds how fast it can be done?
Yeah. Look, the issue was when bridging coins from one ledger to another, you often needed wrappers or bridges, like a third-party tool, which said basically put in token A in a digital contract, we'll keep it there, and then we'll create token B that on whichever blockchain you want. That created double representation of assets. Like you had 1 million Tether on Ethereum that you then wrap into Binance chain. Well, do you now count 2 million? How is this actually counted? And even worse, you want to attack the contract, right? Because you got lots and lots of money that accumulates in kind of an escrow smart contract, which is a central point of failure. People would want to attack that pot of gold. So ARYZE solved that by creating a function in digital cash that we call reforge, which essentially means that you can move 1,000 euro from Ethereum to Polygon. But the way we do it is that we burn token A, and using proof of burn, the system allows you to mint token B. So you destroy the $100 bill and you glue it back together, basically, using the pieces of destruction, And this attitude, this concept was quite ingenious because it is the same logic which enables us to say, well, what if you burn 10,000 euro, but you want to mint $1 or e-gold or e-oil or e-krona? How can we enable that? And the genius part of this is that once you burn your stablecoin, that makes ARYZE instantly over-collateralized by a lot, by the amount you burned. Because if you burn 1 million euro, we don't destroy 1 million euros worth of European bonds, right? So we are over-collateralized for those 30 seconds where before you mint the new coin you want to mint. Now, whether that is a burning euro, minting euro on a new ledger, or that is, let's say, burning euro, minting dollars, both can be done. Now, the final component has recently been enabled by your lovely co-host here and the company SGT. Hence the currency part that we discussed briefly earlier. We can even do like an e-euro from Polygon to an e-dollar on Ethereum. Like we can cross currencies and we can cross chains. And the more in our, let's say that we want to add an Indian rupee, we just have to ask ourselves, can we trade it? Can we buy whatever is needed in the back end in our treasury to be able to issue these rupees? And oftentimes the answer to that is yes, certainly we can. Now, having a local strong partnership in India with the ability to, let's say, hold rupees in the national bank in an omnibus account. Yeah, sure, that's the ultimate end game in many currencies. But even prior to that, we can issue these synthetic variations of all kinds of currencies still being backed by government bonds. So that's reforge is extremely unique. And so the final component, how we imagine reforge to support the CBDC stuff I talked about, we have actually presented to a large bank how you can take and say e-euro, burn it, and mint bank euro. So say banking circle euro, or Deutsche Bank euro, or a Netflix euro. So basically branded variants of digital cash. And say that you wanted to create like a Hilton coin backed by dollars. Well, we could be the Paxos to your coin.
It makes it so flexible for companies to go in and say, oh, I don't have to just deal with e-euro, but I got business in India. I got business in whatever it might be. This would be able to do it fast, efficient, and also the conversions between the different currencies or digital assets just makes it so flexible and so simple, which is one of the reasons why SGT actually is involved in this. So we can actually broaden our investment market from our broker side. Mm-hmm. Sorry for getting enthusiastic here, but that's the reason for it.
Yeah. I mean, the only challenge now is the treasury management in terms of facilitating when you burn one of the digital assets to effectively mint another one, to have that collateralized at the same time. And the settlement, and you're still burdened by the settlement period of those physical assets that you'll have to purchase.
But we can, but that's not really that big an issue, because what we can do is just keep the assets that we are used for backing still for a short period of time, and use FX spot that we roll forward, or FX forwards to hedge the currency risk that we're now facing. And then we rebalance the assets behind to local currency over time and manage that in the treasury management system. That is really cool. So exactly. We can do that. So that way we only have counterpart risk on the FX forwards, which is minimal. Otherwise, the whole system will collapse overnight. And then we have the currency backing that we need. So that's not actually really a big issue. But can I just give you one example more? I just want to give you a concrete example of what we were all talking about with reforge and all these things that we can be doing here. Jack and I met with a couple of years ago with the central bank governor of Kenya. And Kenya have the problem, as we talked about before, that 50% of the population are unbanked. Everybody knows that if everybody was banked, that would increase GDP by about 2% to 3% a year, year on year, proven by Asian Development Bank and African Development Banks, who massive reports with IMF and all that behind it. So what the central bank wanted to do was to create, well, first of all, deal with financial inclusion. Secondly, they wanted to give poor people access to saving programs. They have created specific short-term investment programs so that people could get a yield of 4 or 5% by buying these. Problem was that Kenya had no way of distributing these assets, these savings programs to the general population. So what we are doing is creating the engine room for Kenya themselves to enable that and create a digital representation of these short-term government bonds and distribute them to the general public.
Mm-hmm. And this reminds us of a project that we did for another small African country. We created a digital app which worked through the central bank, and that central bank had cooperatives who were doing local lending to the population.
Yeah.
The biggest challenge was integrating that into the traditional banking system. Now, with ARYZE, I just wish ARYZE was around then. This would make this fully functioning and less friction cost in order to achieve.
Cheaper, instant settlement, money is available on demand, so to speak. You don't have to go to a local bank where you don't have a bank account, so you have to go to an ATM to withdraw cash. Cash is dangerous to carry around in many countries in the world. Now we have a digital representation that is much cheaper, better, more efficient. Simple as that.
Fascinating. Morten Nielsen and Jack Nikogosian of ARYZE. Thank you very much for a very interesting insight to your stablecoin at ARYZE, making dumb money much smarter.
Thank you.
Thank you so much. Thank you for having us. This was fun.